Hey, what's up, guys? It's Jordan with the Laundromat Resource podcast. This is show 132, and I'm pumped you're here today because today is an incredible episode that it's totally different than what we normally do around here, but it is awesome. So I have been fascinated by the concept of infinite banking for a long time now, a few years, I was starting to kind of get a grasp of what it is and how it could work. And I scored, for me, what is a dream guest on the episode. His name is M.C. Laubscher. He hosts the Cash Flow Ninja podcast, which is a podcast I've been listening to probably for 7 or 8 years. And he is the guy to talk to when it comes to infinite banking. But you may be familiar with infinite banking, or maybe not. And if you're not, you're in for a real treat. If you are, what's awesome about this episode is that, listen, we're the Laundromat Resource podcast. So I forced him, I twisted his arm, no, not really, to contextualize this for how specifically the infinite banking concept can help laundromat owners. And it is incredible. Just a super informative episode. He drops a ton of wisdom here. And not only that, he's just a good dude. So a really great episode, one of my favorites. And in fact, at the very end of it, we break down what a family office is and how actually anybody can get started with a family office with no money. He outlines 5 steps of what it takes to create a family office. And I think the first 2 or 3 of them, you don't need any money to get started. So it's something we all should be doing. I took copious amounts of notes. They're all right here. Super good episode. So anyways, I don't want to hype it up too much because I want you to hype yourself up when you're listening to it. So we're going to get into it with MC Laubscher here in a second, host of Cash Flow Ninja. Check out his podcast while you're at it. And before we do, real quick, I want to just say a couple quick things. Number one is we had our first ever LA meetup live and in person a couple of Saturdays ago, and it was awesome. Thank you for everybody who showed up. It was a great turnout. And Andrew Cunningham and I put that together, and it was a lot of fun. We saw some very familiar faces. Ross Dodds was there. It was great. So good, so much so that we're going to be doing more of these meetups, and we're going to be doing them in more markets. So stay tuned for that, because I'm looking forward to traveling around a little bit and partnering with some of you guys, hopefully, in different markets to host some meetups. So if you're interested in co-hosting a meetup with me in your market, shoot me an email, jordan@laundromatresource.com, and let's get working on that, because I think it's so important for us to get together as an industry. I watched a lot of magic happen in that room as we got together. And that meetup, again, that was for current laundromat owners and people trying to get in the business. Just so cool to get in a room together and chat laundromats. So looking forward to doing a lot of that all over the country. Anyways, huge shout out to Andrew Cunningham for doing that with me here in LA. And again, if you're interested in doing that with me in another market, shoot me an email, jordan@laundromatresource.com, and let's see if we can make it happen. Let's get together. All right. Awesome. There's so many things going on right now, but I am just going to have to leave it for another day because I want to jump into it with MC. Keep an eye on your emails going out, because there's a lot of stuff going on right now. And if you're on that email list, just be looking out for emails, because you're not going to want to miss stuff that's happening right now. Good stuff. Good stuff. All right. Let's jump into it with MC Laubscher, and let's talk about how we can not only build wealth through owning laundromats, but do it in a way that sets our families up long-term, and that helps us build that wealth faster in the now term. All right, let's jump into it with MC Laubscher, host of Cash Flow Ninja, right now. MC Laubscher, I cannot believe, listen, man, this is a little unreal for me because I've known about you before I knew even about cash flow, really. And, you know, host of the Cash Flow Ninja podcast, Obviously, long going, really, really awesome show. So if anybody's out there listening to this podcast, go subscribe to that one because that one has got a lot of really good stuff. But anyways, thank you for coming on the show. Super excited to chat with you about how we can help these listeners grow their wealth exponentially quicker. Thanks for coming on the show,
Awesome.
man.
Thank you so much for having me. I've been looking forward to this.
Yeah, well, it's something that I've been, eyeballing for a long time and have been wanting to sort of introduce to this industry. I know some people are familiar with it, but for those who aren't familiar with sort of with this infinite banking concept, I wanted to kind of go through and it's sort of a little bit of a dream here to have you here explaining it because I'm pretty sure that was my first introduction. Was on your podcast to the infinite banking concept. But real quick, I just want to paint a picture for everybody. When I bought my first laundromat, most people who listen to this podcast know that did not go well for me. And, as I was trying to figure out how to do things, I was spending a lot of nights, like overnight, after we closed down, working on the place. And I started listening to podcasts. And one of the first ones I started listening to was yours, the Cash Flow Ninja podcast. So I've got a lot of great memories of, well, I don't know how great they were on the one hand, where I was like trying to fix up my laundromat myself overnight. But I learned a lot during that time, and a huge thank you to you because a lot of that learning came from you and your podcast. So appreciate that. Let's start here. What is infinite banking? What is it? And can you just kind of give us a quick overview of what the concept even is?
Yeah, so I think the best way to explain it is it's a cash flow management system. And it's a cash flow management system where you are reclaiming the banking function within your own personal business and investing economy. Now, if you look at the world, and by the way, this story was shared to me by one of my mentors, the late Mr. R. Nelson Nash, and he talked about this huge pool of water that is the planet. If you just zoom out and you see the world, the spinning ball of dirt that we're operating on, there's a lot of water, and there's a ton of oceans, and all the oceans are connected to one another, and then there's rivers that goes into the land, and the rivers are connected to the oceans. And then you have, of course, have underground water too. And then the earth gets hotter, gets warmer. There's condensation that forms. There's clouds. It builds up. It becomes too heavy. And then the clouds start to break and it rains. And the water comes back to the earth. And where does the water go? Well, it comes back to this giant pool of water. It goes into the oceans, which are connected to the rivers, which are connected to the oceans. And then, it falls onto the ground, which goes into the underground water, which is connected to the rivers, which is connected to the oceans. It's one big giant pool of water. Now, what does this have to do with cash flow management? If you look at the commercial banking system, it's the exact same thing. Banks have figured out a strategy by where they deploy capital constantly. They have this giant pool of money, of capital, and the money leaves the banking system, but it always comes back. If you think about it, every loan that is issued, money leaves banks, but then it's repaid. It always comes back into their giant pool of money, of capital. So they do it over and over. So the concept here is that money is always leaving your personal, your business, and your investment economy. You can structure it through proper cash flow management that it's always coming back. And you are the banker in this process that benefits from this cash flow management system, and it helps you to improve efficiency. I love cash flow, and I started out as a business owner and an investor, and I love creating cash flow in the business, creating profits, and I love creating cash flow in investments like the real estate. Right, bought my first property. What is it now? 2023? I bought it in 2001. So over 2 decades ago, and I loved cash flow. But I was very focused, not so much on the forest, but the tree. And then as I started to zoom out a little bit and I started to see the forest and the trees inside of it, I started to realize, wow, generating cash flow in my business is great. Generating cash flow in my investments, that's great too. but there's a missing piece. I need a little bit better cash flow efficiency in my personal business and investing economy. And when I started to do that, everything started to increase exponentially from a wealth standpoint. The businesses started growing quicker. And of course, the investments started growing quicker too. And the system was up and running. So that's kind of what infinite banking is conceptually. Everybody talks about becoming your own banker. And that's actually the book that Nelson Nash wrote. It's a process. That's why it's not become your bank or become a banker. It's becoming, because it's ongoing, and you need to monitor it and increase efficiencies constantly. So that's kind of where infinite banking fits in and what it is.
Yeah. Well, listen, I mean, you're speaking some magic words, right? Because I think a lot of people in our industry, or, really in any industry or investment asset class, wants to, number one, have that cash flow to have the freedom, right, that we're all looking for, and to set up our lives the way we want to, and to spend our time how we want to, whatever that might look like for anybody in particular. But when you start talking about this efficiency that's helping your business and investments grow exponentially, or even just quicker, that is what gets ears perking,
Yep.
right? And so, for me, when I started hearing this concept, I'm like, yes, this is awesome. And, I understood sort of the basic concept of, you have this pool of money that's, getting a return, and then you can borrow against it while it continues to get a return, which we'll get into a little bit more of the details of what that actually looks like here in a second. And then utilize those, the funds that you borrow against to, the context I first was introduced to it was to buy rental real estate, right? And so you've got some cash flow coming in from the real estate. You've got your cash still working here, and you've got this loan that you've basically taken from yourself, essentially, and are using, your cash flow to sort of pay that back, right? So, and then, it sort of dawned on me one day. It never crossed my mind. Dawned on me one day, like, why can't you do that with laundromats? And because that's the industry I'm in, right? And we had a conversation. You're like, you totally can, and it can work really well. So I want to get to actually contextualizing that also. But can we jump into a little bit of the weeds? We don't have to go too far down the rabbit hole, but a little bit of the weeds. Like, okay, so I want to have this cash flow efficiency. What do I need to do actually to set this up for myself?
Yeah, in the system, in a framework, and I love frameworks because you can apply it in your life, regardless of where you are. Some folks might just be beginning. Maybe they've bought their first laundromat. Some folks might have 5 or 10. Some folks might have 20. Some folks might have 50. So that's why I love frameworks. So the first framework is we all make our capital. We create capital in some way, shape, or form. So whether it be in the capacity of a W-2 employee, whether it be as a self-employed person, a business owner, or investor. And then we have to put it somewhere. We have to position capital somewhere. And then we have to deploy it. We either deploy it back into our businesses to generate more cash flow from businesses. We deploy it in the laundromats and real estate. And then, of course, we have to protect everything. And it's done through tax strategy, it's done through asset protection, and it's done through proper estate planning. So where infinite banking fits in, I'll get into exactly what it is and how we use it, and how people in our network use it. So where infinite banking fits in is where you position this capital. Now, you can position capital in a number of assets where you can purchase an asset or position capital in an asset, where you can utilize that asset then as collateral to establish a credit line. So you can purchase an asset that can generate cash flow, appreciate in value, and also provide great tax benefits, and you could use a little bit of leverage, but you don't have to sell that to extract capital from it. You could place it as collateral. And this is huge, of course, in the banking system. So what I mean by that is if you're a real estate investor, you've heard of a HELOC, a home equity line of credit. So when you want to tap into an equity of a house, You don't sell the house. You just get a HELOC, and now you have a credit line, a revolving credit line. You could do a cash out refi too. I understand that, but let's just use the HELOC as an example. You could do the same thing with a stock brokerage account, by the way. It's called asset-based lending. And fun fact, that is how Elon Musk came up with a down payment to buy Twitter, which is now X. He placed a lot of his Tesla shares as collateral. And I've talked about Elon's strategy for years now because he loves this. Why does he do that? Well, he doesn't have to, number one, sell his Tesla shares. And number two, there's no tax consequence. Because had he sold that, well, now there's taxes. He doesn't own it anymore. He places it at collateral and get a loan, a revolving credit line against that. You could do the same thing with gold, silver, and art. I've actually used gold and silver to establish a credit line. You could do the same thing with your business. If you have a business that has assets or equipment or receivables, you could place that as collateral to get a line of credit. What we use and utilize is life insurance, and very, very specifically designed life insurance policies. These are life insurance policies that are designed with living benefits. This is what the ultra wealthy do. Family offices, centimillionaires, multimillionaires. This is what corporations do. So you design life insurance, not just that somebody benefits when somebody else kicks the bucket. You design it that it becomes a place where you warehouse capital. So we, for example, use a dividend-paying whole life insurance policy with a mutual insurance company. Mutual insurance companies are not listed on the stock exchanges. They are outside of the Wall Street casino, which is a very, very important because they manage the company on behalf of their policyholders. So they are their shareholders. So we use mutual insurance companies. We set up these insurance policies, which is designed, by the way, for cash value, for your savings. It does have a death benefit, but that's not the primary objective here. The primary objective is getting your money inside of these life insurance policies, and that's where you warehouse capital, not banks. Trust me, you don't. That should not be a place where you're warehousing large capital. At the time of recording and what we're seeing coming in the next 6 months, you definitely don't want to have large sums of money in banks. We've already seen 5 fail. 10 has already been downgraded by Moody's. 11's on a watch list. There's a lot of fun coming in the next couple of months. But let's just put that aside. The primary place where you warehouse your capital is these life insurance policies. Why? Well, the money in there is guaranteed. So the savings that you have in there is guaranteed. It never goes down in value. It's not tied to the stock market. You also have guaranteed growth. So the growth every single year, your policies are contractually guaranteed to grow. You also get dividends, which is kind of like quote unquote profit sharing, because you are a shareholder through a policyholder in the mutual insurance company. So when they're profitable, you get a dividend distribution. Some of these companies have been around since the mid-1800s, and they've been profitable every single year since the mid-1800s and pay dividends every single year. So you get to benefit from that. So you're earning about 3 to 4% in these policies, but it's tax-free. The growth and the dividends are tax-free. Now you have to obviously put up capital and take additional risk to get 8 to 9% out in the market pre-tax. So 3 to 4% you get tax-free. And of course, the great thing about it is you can establish a line of credit, a life insurance line of credit, just like a HELOC, against the cash value. Usually it's up to 95% of the cash value that you have in the policy. There's some ways that you could do 100 too, that we've leveraged that in our network. But you set up a credit line, and then you can use that money to buy more laundromats, buy more equipment, and so forth. Now, why would I want to set up a credit line to access the cash? Well, number one, it's tax-free. You access the money tax-free. Number two, your money is now working in 2 different places simultaneously. So the money that's inside of this life insurance policy keeps on growing. It is uninterrupted compound growth. So because you never actually touch the cash value, you have a line of credit secured by the cash value. So if you have $100,000, let's just say, in this account, and you take a loan for $50,000 to go and buy equipment for one of your laundromats, you still have $100,000 in that account, earning uninterrupted compound growth. And then you get to use that 50 to go and buy equipment. And of course, you can structure it where you obviously get the tax benefit from the equipment too for your business. And maybe it is, you've added more machines, so there now is increased profit in your business. So there's a lot of ways to creatively do this. But that's kind of at the core of the strategy. So we generate capital, we position it in these insurance contracts because number one, now it's in our own pool, our own little pool of money, our own pool of capital. It gets deployed in our business and investments, but it always comes back. And I'll give you one quick example that we've actually used with equipment in our network. And you could definitely do this with laundromats. So one of our clients at Producers Wealth, which is the insurance brokerage firm, which I founded about almost a decade ago. It's funny, time flies when you're having fun. We service clients in all 50 states in the United States. But one of our clients, so what he did was he set up the policies, and he set it up for his family. He took a policy loan from using a credit line, right? So he set up this line of credit. It's also called a policy loan. Took the capital. His money was still working in these contracts, earning 3 to 4% uninterrupted compound growth. So then what he did was he created a note to his business because he was lending his business the money. And his business then took the loan and went to go buy equipment. And because it was equipment, you got the depreciation and you get the tax benefits and so forth. And the business is now repaying the note to him at above the interest that he's getting on his that he's being charged on his credit line. Let's just say it was 5% on his credit line from the insurance company. He charged himself 10%, or his business 10%, which can be written off taxes too. So number one, there's so many ways you got to dissect this. Just think of in how many ways your money's working here for you in this one example. So in this one example, your money is in a life insurance policy that is growing uninterrupted, 3 to 4% compound interest, tax-free. Then you leverage it through a credit line. Lend the money to the business. It's a loan that has to be repaid. The business bought equipment, got a tax benefit from buying that equipment, and it's going to generate more money for that business. So there's some more capital at work there. The second piece is the business is repaying the loan to the person that lent them the money and paying them back at an interest rate. So they're paying 10%. Each credit line was at 5% and it's simple interest. So there's a profit there too. So this is what I talk about efficiency. There's just so many ways here that, and by the way, I forgot to also mention they can deduct those payments for the equipment, right? The loan and the interest. There's so many ways that your capital is working here. And it's one pool of capital that we're talking about. In this example, I just use, let's just say it's $100,000 that was put to work. Just think how many things that one pool of $100,000 was doing for this client of ours. And that's what I talk about, efficiency. Could this client just have gotten a traditional loan or a line of credit at a bank and buy the equipment, pay the bank back and still make money in the business? Sure, of course. But now cash flow efficiency, he's the banker. His family's the banker. He has now created this pool of capital, which he will deploy into the marketplace. It'll all come back, and it's at the same time, this one pool of capital, this example, 100,000, is doing so many different jobs. I lost track of counting. I think it was like 3 or 4 or 5, right about there. Different things that it's doing simultaneously. And by the way, I didn't even throw that in. If something had to happen, there was a death benefit that kicks in for the client. From a family continuity standpoint and a business continuity standpoint, so I guess we could go on and on and on and on the many different things that this did for that specific client. But that's how you increase efficiency. That's now you're generating cash flow in your business, your laundromat, and your cash flow efficient, which frees up so many other things that you can do as well.
Yeah. I mean, it's just, okay, you're talking about all this stuff, right? I just like my level of excitement just kind of grows and grows and grows, right? Because like you said, there's that money is working in multiple ways. And, as I have just, spent a lot of time with people who are much more savvy than I, like yourself, when it comes to, finances, cash flow, business, all those things, right? I just see how the people who are able to grow their wealth, quicker than most people, uh, they're utilizing multiple, they're utilizing strategies that allow money to work in multiple different
Yep.
ways, right? So utilizing other people's money is great, and that's actually, my initial was like, man, you're not using OPM at this, this thing, but actually, you are utilizing other people's money in this, right? That insurance company is loaning you money and collateralizing your money, but it's their money that you're utilizing. Your money is still there, like you said, and it's still working. It's still, growing at that 3 to 4% interest rate there. And then you're able to take that money from the insurance company that's collateralized, which is different than utilizing your own money, and do all these things with it. And like you said, there's all kinds of benefits of this. Especially, I love that you brought out the example of creating a note, uh, you know, between your money that you're lending from your policy to your business, because again, there's a lot of tax advantages of doing something like that, whether that's on the acquisition side of buying the business, or that's on like a retooling side where you're actually putting new equipment in there, and instead of utilizing a bank or one of the lenders in the industry, you can utilize your own funds if those are sitting there, and like you said, grow it in multiple ways simultaneously, and you're benefiting from a ton of tax benefits on top of it, which we all know, or we all should know. If you don't know, you're about to know. Taxes are really your biggest expense unless you're actively setting your business and your finances up in a way to where they're not your biggest expense, which is what the wealthy people do.
Absolutely. And I will like say there's two big lessons that quotes that I've got written down and I look at almost every day. And I butcher quotes, by the way. That's one of my side hustles. But it's to the effect that Henry Ford had someone in his office, and Henry Ford said to them, "Don't work too much or too hard and so much that you don't have any time to get wealthy." And the employee looked at him completely bewildered, or the person that was in his office, like, "What are you even talking about? Stop working too much or too hard so that I don't have time to get wealthy." That always stuck with me. And the second thing was, and this came from a mentor of mine that said, everybody talks about how you should have your money your money should work for you, right? Don't work for money. You should let your money work for you. And Robert Kiyosaki from Rich Dad, Poor Dad, really talks about that too. But the one thing is missing is, if the objective is to deploy your capital and have your money be working for you, why wouldn't you give it more than one job? Don't let it be lazy. Don't make it easy on your money. Let it do like 3, 4, 5, 6, 7, 8 jobs. And the other thing that I would also share, and maybe this could be a third one, is money has to be positioned somewhere. Capital, right? We all need it. And I have gone through all the things. Cash is trash. There's inflation. The dollar's being devalued. I've said all those things myself. I understand that. You have to have capital somewhere as a business owner and investor. So where you position it should benefit you, not the banks, not Wall Street. Put it in a place where you get to benefit from it. And then one thing that I also wanted to share, a lot of business owners, and I see this all the time, their retirement, quote unquote, strategy is exiting their business. That's it. And I always say that, if you're an employee and you're working a 9 to 5 and so forth, nothing wrong with that. But most people in America and around the world, by the way, their retirement strategy is buy a house, pay off the house, and the rest put in qualified plans like 401ks, 403bs, IRAs, Roth IRAs. And then maybe if there's a little bit of capital, give it to like a financial advisor that's a friend of the family or something. And that's it. And if the housing market blows up and the stock market blows up, you're done. It happened in 2008, 2009. There's no plan B or backup plan. The same thing I say to business owners, their exit is, well, I'll just sell my portfolio of businesses or laundromats, or that'll be my exit. And that's my retirement, basically. What these policies do as well is you can structure it in a way, doing all the things I just told you. But on the back end, you can actually pull out retirement funds tax free from these life insurance policies. So, executive packages in Fortune 100 and 500 companies, they call it COLI, corporate owned life insurance. This is what this is. A lot of CEOs, you don't recruit a top operating CEO, you don't recruit them with a salary and a 401k. Okay, that doesn't happen. You know, the Sam Zells, or he's a founder, but the people working for him and running his business, and Jeffrey Immelt with GE and so forth, like those guys weren't recruited saying, hey, come and work for us. We'll give you a good salary and a bonus and a 401k. No, how you recruit those guys is you give them stock options and access to load up on more stock every year and life insurance. Why? Because the life insurance gives them a tax-free retirement, a certain amount, which they negotiate up front. And then, of course, the stock, that's really where they're swinging for the fences, because if those CEOs can increase the value of the companies, then the stock goes up and they make more money. So what does it mean for you listening that's buying laundromats and getting a portfolio of laundromats together? When you have something like this, you have a backup plan. You have a plan B or an additional income stream, tax-free, on the back end, the back nine of your life. You know, I don't plan on retiring, so I just call it, it's going to be the back nine, right? But if you need a income stream tax-free, well, you have a plan B in place. And obviously the goal is never ever to touch it. It's to leave a legacy. It's part of, the family banking strategy, which turns into the Rockefeller strategy, which we talk about quite a bit. So the plan is obviously not to do that on the back end, but it's a plan B. So it gives you a lot of clarity. It gives you confidence. It gives you certainty, so you can swing for the fences now and build out your businesses and grow your portfolio of laundromats. And you know that you've got a nice cushion just by positioning capital effectively.
Yeah, I love this. I mean, so much good stuff in that. I mean, go real quick. I wanted to swing back by one of the quotes that you probably butchered, that I'll butcher. You're quoting that butchered quote. But essentially, like, hey, don't be so busy working that you don't have time, to get wealthy. And I just want to mention this for anybody listening. Like, I hear this mindset all the time. I've experienced it myself, where I get wrapped up in what I'm doing, right? And you get into these grooves in life where you're like, okay, life's not that bad. It can be, I can do this, right? And so you just keep doing the same things over and over and over again. And you forget there's a whole lot more out there for you if you want it and you want to go get it, right? And one of the best things about not having to worry about money, like being financially free, being financially independent, right? Having your expenses covered, whether you stop working or keep working or whatever, is not the fact that you can go sit on the beach and drink Mai Tais, right? Like, that's the dream that's sold, right? And that's great. And listen, I'm a beach bum. We go to the beach once a week here, at least, right? And so I love the beach. However, that gets old, right? That does get old, at least doing that every single day. And that's all you do, right? But one of the best things that being financially independent can give you is having space to think beyond what you can when you're in that normal everyday grind. You're doing your 9 to 5. You're worrying about paying the bills. You're worrying about, this is why I'm so passionate about helping people achieve that financial freedom. Happens to be a vehicle of laundromats because that's what I know. I really don't care what the vehicle is, right? I really don't for you. I don't care what the vehicle is. I think laundromats are a great vehicle to get to that financial freedom number quicker than most other vehicles. However, whatever the vehicle is, you've got to get there, not so you can sit on the beach, maybe so you can sit on the beach for a little bit and enjoy that and just relax because you've worked so hard, but also so you can have that space to dream about this bigger life, right? Because, not only can you take a strategy like this and, build a bigger portfolio and grab more cash flow and build, equity. But then you can go around and you can start saying, hey, I have all this access to capital. I have all this equity. I have this, insurance policy. What more can I do to actually help other people? What more can I do to impact this life? What more can I do to set my future generations up? Like your mind starts to open up on things that you didn't have space for beforehand. And so I love that you brought up that quote. I mean, so much of pretty much everything you're saying is just jazzing me. I'm just getting like very excited right now, and I should probably just calm it down a little bit, because everybody on YouTube tells me I talk too much, which is probably true. But I love that you said that, because I think there's just so much more out there if you can create a little space. You just need a little at first, right? Create a little space to work on building your wealth, right? In small ways. And then that space can grow over time to where you get to a point where you don't actually need to do a whole lot of work to pay all your bills. And now the options open up for you. I'm going to pause in case you want to comment on that. And then I've got some more questions for you.
No, absolutely. I just to touch on what you shared, freedom means different things to different people. But, I like to think of Dan Sullivan's definition where he talks about freedom of time, freedom of money, freedom of relationships, and then freedom of purpose. And Dan Sullivan is the founder of Strategic Coach. He sums it up really, really well. Because if you look at those four freedoms, you look at the freedom of time, you control your time, freedom of money. Money no longer becomes a reason why you're not doing something. And then because of that, you get to do the things that you're passionate about and that fuels you with the people that you want to do it with. You can get picky. You don't have to work with someone or have a relationship just because you basically need it. No, you're free. So you work and do the things and spend the time with people that you want to. And then obviously purpose. When you have that, when you have control over your time, control over your money, you have control over the relationships, who you spend time with, then you can really, really nail into your purpose. And I think that's when you really start to get a multiplier effect. And that's why people, I think the first thing, and everybody, if they get started, is just to get financially free and independent. Like have your income that you generate from, in this case, the Laundromats, just let that cover your expenses. And now, because of that, your living expenses are basically covered. The nuts covered, if you're a squirrel. And now you can swing for the fences. And that's really when you're going to see a multiplier effect.
Yeah. Awesome. Okay. All right. I want to get us back on track here, but this is a super important question. I bet a lot of people are chomping at the bit to ask this question or for you to answer this question. So you mentioned earlier on, just sort of in passing, this is how a lot of decamillionaires, multimillionaires, uber wealthy, this is a strategy they utilize. I know a lot of people listening right here will be that at some point, but aren't there yet. So who is this strategy good for? Do I need to be a multimillionaire? Do I need to be a decamillionaire to utilize this strategy? Who's it good for? Who's it not good for?
So that's a great question. So the first thing is, this is not a get rich quick. There's no magic bullets. So it's a life insurance policy. So there's a portion that goes towards the insurance, and then there's a portion that goes towards the savings. And if I have to generalize it, because we've got such a broad audience, people from all ages, you could start it in your 20s. That would be great. You don't have a lot of resources yet or high income, but you have a lot of time. 30s, great time. 40s, great time. 50s, 60s. We've done a ton of stuff for folks, even in the late 60s. You have a lot of resources, a lot of income at that stage. Not as much time as a 20-year-old. There's strategies for everyone when it comes to the regardless the age that you're at. So number 2 is the mindset. This is something that you're going to do as part of a holistic strategy. All right, so we've covered the age. There's different strategies for everyone, regardless of what age you're at. The second thing is mindset. This is something that you're going to do within your strategy already. So it's going to be something that you want to do, for the rest of your life, because it's part of your holistic wealth strategy. The same thing as you want real estate that pays you for the rest of your life. So there's no, people that think short term and are only interested in short term profits, quick hits, magic bullets, get rich quick. That this is not for you. The third thing, then, from an income level, is what I would recommend is you have to have at least $10,000 to allocate to these policies, because as I mentioned, there's a portion that goes towards life insurance and a portion that goes towards the savings element. And again, broad audience, wide audience, but about 30% goes towards the insurance, and 70% of the premiums goes towards the cash value. And of course, if you're younger, there's a different scale. If you're older, there's a different scale. And of course, what life insurance underwriting rating you will get, there's a different scale too. So I would say at least $10,000. This is an advanced strategy and level strategy. So you have to have your ducks in a row too. Folks that have a lot of debt, that have their personal finances is a mess, I would recommend you straighten that out first, get your house in order before you add this element to that. It is an advanced strategy, but you can do it yourself too. My philosophy has always been, you don't need to be a Rockefeller to do what the Rockefellers do. You can see their frameworks and their strategies and utilize their frameworks and implement and execute some of the strategies which they do on a smaller scale, obviously. And it's still going to move the needle a lot for you. That's how I started. I started like 14 years ago with this. And I started and I just, grew my strategy to eventually now, 14 years later, married with kids, we have our own family bank, and we've become the primary vehicle, for financing the things and activities that we're in, whether it's businesses or investments. But yeah, there's strategies for everyone, but you have to have the right mindset. You have to have your ducks in a row. And then, at least $10,000, I would say, to start per year, for it to make sense, because you do have that insurance component in the policy as well as the savings element.
Yeah. Well, actually, $10,000 per year, that's not chump change for most people, right, out there. But it's actually a lot less than I was expecting you to say, actually. Now, obviously, in our industry, if you're putting $10,000 in, it's going to be a little while before you can go out and buy all new equipment for your store, because, our equipment's not cheap. However, listen, what we talked about is starting to create a little bit of space. Like, you can't, some people, you're there, like you can fund this thing right up front and put that money in there, get it working for you, and then you're off to the races, right? Some of you guys I know are already there and can do that. Others of you are not there yet, right? And others of you, that $10,000 a year seems like an overwhelming amount to put in there, and that's okay. Like, I don't want anybody to feel like that they can't grow their wealth, because listen, this whole thing is a process for all of us, right? And if MC had talked to me, a decade ago when I had just bought my laundromat and I was losing a couple grand a month in my laundromat, and this would have felt so discouraging to me. So I don't want anybody to feel discouraged, because this is all part of the process, right? And the process is we start wherever we're at now, right? And some of you guys are at a place where you're in a lot of debt and you need to get your personal finances in order. And so let's start taking the steps to get there. Some of you guys maybe don't have a lot of debt, but you just also don't have a lot of money, or you don't have disposable income to put 10,000. No problem. But let's work on, increasing your income yearly and getting to that point where you can start, utilizing a strategy like this. Right. And then, like I said, some of you guys are already there. You've got a pool of money. It's sitting in the bank and you're starting to think, yeah, man, why don't I become my own bank? I look at all the wealthy people around, and a lot of those guys are they own banks, right? Like, why don't I own my own bank and become that wealthy guy or gal who owns a bank and do that myself, right? So no matter where you're at on that spectrum, maybe you're not at that point yet where you're ready to do this. That's okay. But let's reverse engineer it, right? So if you're like, okay, I want to get at least $10,000 a year of extra income, let's reverse engineer it. Take where you want to be and work backwards to where you are and figure out the steps you need to take to get there. So yeah, that's awesome, man. Thank you for sharing. I know it varies depending on all these different variables, but thanks for giving us sort of a guide or a benchmark to work with here. That 10,000.
Yeah, no, and I love what you just said about starting where you're at, and I have that same philosophy, and I tell folks that over and over. You start where you're at. If you need to get your ducks in a row, get your ducks in a row first. One of the things that obviously we encourage is that the whole principle from The Richest Man in Babylon by George S. Clason of paying yourself first, at least 10% of your gross income, put that away. Make that then a goal. So if you're not there yet, focus on putting 10% away first of your gross income and paying yourself first. That's investing in your future and paying your future self, right? And if you're at 10%, push yourself to 25%. A lot of these companies will allow you to put up to 25% of your gross income into policies. So if you're putting away 10%, let's push to get 25%. And what we've seen with clients, once they become cash flow efficient, the next thing you know is they're putting away 50% of their income because their income has grown and their expenses have gone down. Now, I'll give you an example. Another thing with cash flow efficiency where this ties in. If you have a pool of capital and you have these policies that are funded and you have a minimum of 6 months capital at all times in these policies, which we recommend, it's kind of like an emergency fund too. If you have that in place, you can look at increasing efficiency in other areas. For example, raising deductible on other insurances. If you have 6 months of living expenses tucked away and you have it at all times, you can raise deductibles on property and casualty policies. You can raise deductible on medical policies. You can raise deductible on disability policies. And for most people, that frees up thousands of dollars per year. It has in my own economy, and I've seen it with clients too, where all of a sudden they just freed up thousands of dollars now. If the worst case scenario happens, and let's just say, for example, there's a medical emergency, well, they can grab capital from their banking system to pay the high deductible. But in the meantime, if nothing happens, all of that money is then recaptured. And where can you put it? Well, you can put it back in your banking system. So it's kind of a snowball effect of efficiency inside of your own banking system. So, there's a lot of ways that you can get creative with this. But to your point, just start where you're at, get your ducks in a row, push to get 10% put away of your gross income. And then if you're at 10, go to 25. And then, the fun starts. You build that snowball. You'll get to put away 50% of your income very, very quickly. You have to have a plan for this, by the way, too. Just, everything is intentional. If you don't have a plan, you will fall victim to Parkinson's law. So Parkinson's law is going to get you. And that law dictates that the more you make, the more you spend. Everybody can relate to this. Everybody has been punished by Parkinson's law at some stage. I have. You have to be intentional and you have to have a plan.
Yeah. And listen, you're saying, you can save, 10%, then you can save 25, then 50%. And I know a lot of people are probably having like a physical reaction to that. Like, there's no way I can ever get there and do that. Right. But like you said, listen, the world is bigger than we ever thought. Money is infinite, right? Like, we can just print as much of it as we want. Now we're starting to see some repercussions to doing that with other countries starting to say, hey, what's going on here? But as of right now, this money's infinite. It's not backed by goals, not backed by anything. It's infinite. It's all out there. Right. And you can attract that money there. But like you said, that Parkinson's law is real. It's real with our time. It's real with our money. That Parkinson's law is real. And you've got to have a plan, number one, on how you spend your time, right? And we already talked about creating a little space to get wealthy. Well, here's the thing is that if you don't have a plan on when you're going to spend that time to work towards getting wealthy, whether that's educating yourself, networking, actually doing some work, guess what? That time's going to get filled up by scrolling on Instagram, listening to our podcasts, which is great and everybody should be doing, but you've got to take action on these things, right? So you've got to, get that time. And then, like you said, with that money, you've got to guard some of that money like your life depends on it, to not spend it, put it in a different bank account in a different bank. If you have, we do that. We have money that we do not, we do not touch, and it's somewhere else other than when our normal money goes, right? And now, hopefully not for very long, it's going to be in a different bank, account. It's going to be in your bank account, but whatever the case, right? Like, you've got to create that space both with time and money to be able to do that. And once you do that and you start putting that time that you're guarding with your life, once you start putting that time aside and that money aside, and then you start deploying it to help you just slowly build your wealth, like you said, you're going to work to that point where you can save 25, 50 plus %. I've got plenty of friends. I'm not quite there yet, but I've got plenty of friends who save, who set aside 90 to 95% of their income, and they live off of that 5 to 10%. And that seems overwhelming, but that is doable. You can get there, but you've got to be disciplined. Like you said.
I agree with you. That's in our network. That's where folks end up. I wasn't even going to go there, but yeah, they end up at like 90%, just get swept back into the system. Because at the more velocity you create in your own economy too, the more you have to deploy capital too. That's actually the fun thing. Most people complain about the U.S. tax code. The funny thing is it actually forces you to deploy capital into certain areas where your wealth will grow and you generate more cash flow. And it punishes you if you just hold on to that or go and buy, cars, boats, big houses. And I understand, there's ways to do that tax efficiently too. But for the most part, if you just increase your income significantly and fall victim to Parkinson's law, and now your boats and all this kind of stuff that are kind of like I think Robert Kiyosaki calls it doodads. You're spending all your money on that, you get punished. But you deploy that into assets that benefit other people, like housing or energy. Well, now you get tax benefits. You're increasing your cash flow, and your overall net worth grows. So it forces folks, when you have that velocity going, to keep deploying capital. So yeah, I mean, that's where everybody that's listening to this should have a goal of ending up. But start small, start where you're at, and that's the summit that you're working towards.
Yeah, I love that. Before we wrap this thing up, and I'm gonna give you an opportunity to tell people how to connect with you. But before that, can you just indulge me here a little bit? I know a lot of people aren't here at this point yet, and a lot of people probably have never even thought of this, but this is something I've been thinking more and more about. And I think that this infinite banking concept could fit in really well with it. And it's sort of that generational wealth, right? And that generational, helping set up finances in a way that will not just give like your kids and your grandkids huge lump sums of money. And maybe there's ways to incorporate trusts into this, right? But really setting your family up, and there's an education piece of this, right? But really trying to set up future generations to, number one, understand money and how it works and how it flows and how to properly utilize it. But then also having a system in place to help fund businesses for family members down the line, and to help fund education, whether that's formal or informal education in ways like that, and being able to utilize funds from the family bank in order to, help set up future generations to be able to, also create value for the world and be compensated for that.
What you want to give future generations is opportunity, not money. And there's a way to set this up and do this. If you look at what they do in family offices, and a family office is like a private wealth management firm for an ultra wealthy family. So families that have like $50 million of net worth and up. It's very common for families that have $100 million and up that they plug into a family office model. But that's what a family office is, and it's based on the Rockefeller family office model. If you look at the areas of a family office, and I'll share with you the framework that we use, and we help teach and our clients the same thing. We have, courses for them and that kind of stuff on it. But there's 5 areas. So the first part is the legacy documents. And it's funny that these family offices, and again, none of the stuff cost you money yet. Some of it will do, but let me just explain quick. Family legacy documents. So just as the United States have a Declaration of Independence, why we created this country, the family has one, a statement of purpose. Just like the United States has a constitution, these are the principles, and it's the guiding, basically the guidelines of how to operate and function as a country. A family has one. So you can create that too, and we have materials and so forth of our that help our clients create their own statement of purpose and their family constitution and legacy videos. If you have messages and lessons that you've learned, you can record them on video now. It's so easy, and you can build up a wealth library of lessons that you've learned for your children, your grandchildren, your great-grandchildren. That's the first piece, is your legacy documents and the legacy piece. The second piece is the family retreat, and that's based on the Rothschilds. The Rothschild family is a banking family in Europe. They have 5 sons that were sent to different cities all across Europe, and they would get together every single year for a family retreat, sharing best practices, like a family mastermind. And this strengthens the bonds in the family. They review the statement of purpose, the family constitution, who we are, what we stand for, where we're going as a family. All very, very important stuff. Then the third piece is the legal infrastructure, which could be set up with trusts. You can set up trusts where you owe nothing but control everything. And within these trusts, you create opportunity for future family members. You don't create trust fund babies. So that's very important too. The fourth piece is the family bank. And the family bank is what I just shared. We take these infinite banking policies, and all of the family members have these policies on themselves. If you're just a young family starting out and you're the person setting this up for your family, you would have policies on yourself, your wife, and let's just say you have 2 kids, you have policies on them, and you maximize the life insurance on them. And of course, when the parents then eventually, when the children have their children and the parents then pass, there is a massive deposit made into that family bank, which then more policies is set up on family members. So the money stays together. It's never divvied up, and it stays in that family bank. And that family bank is structured, as you mentioned, to provide opportunity, not just money, for family members. So they can apply for a loan from the family bank instead of going to a bank and repay that loan to the family bank. So you can create a whole system. And then the final piece is just the asset management part of it. And that's, of course, what the family invests in, whether it's businesses, the businesses that they're in, real estate, and of course, equities, if it is equities, commodities, laundromat portfolios, and so forth. But that's the kind of the 5 piece, and that brings it all nicely together. You can have a family office structure like this, and you can build it out yourself as you're working towards increasing your net worth, and eventually, with the intention of becoming, a family with an 8 or a 9 figure net worth, right? But you start where you're at, same thing. And you could set these things up. Like I mentioned, the first 2 things, by the way, that I mentioned, the legacy piece of it, which is the documents and the library and the family retreats, that doesn't cost you any money. If you travel somewhere for the family retreat, maybe, but the legacy piece and the videos doesn't cost any money. You've got the family retreat, which families go on vacation anyway. Then you've got the legal framework, which, you will need a lawyer to set that up. That's qualified. A family bank, which you deposit capital into these life insurance policies, and then the asset management piece.
Yeah, and what's interesting. Well, first of all, those retreats can actually not tax advice, but can also be tax write off. They could be business
Yep.
expenses. So just kind of point that out. But yeah, I mean those first two. What's interesting is everybody always wants to skip to the good stuff, right? Like I want to have the infinite bank and I want to have all that. Well, you can have all that, but if you don't know what you're going to do with it, you're not going to be able to utilize it correctly, right? And maximize the benefit of it. And you've already shared like a ton of different ways, and I know there's even more ways that you can utilize the system to really create a lot of efficiencies with cash flow, taxes, etc., generational wealth ability, all that. Like there's a lot of things that you can
Yep.
do, right? But if you don't have sort of the framework, going back to frameworks, right? If you don't have that framework of, okay, we're going to start building this, we're going to start where we're at, we're going to start small or big or whatever. And here's the reason that we're doing it. And here are the guidelines that we're putting around this. And here's when we're going to get together to reaffirm things and to tweak things and to share what we've learned, to put together. I do this with my family, with my two brothers and our families, and we share contacts that we've made so we can expand our family network. Share lessons that you've learned. We've got a little book that we've sort of started with sharing lessons, right? Like you said, all that's free, but beyond that being free, that's the
Yep.
foundation, right? And you don't have to have everything figured out. This is all evolving for us and for all of these family offices, right? This because the world is changing, the family is changing, our knowledge is changing, our wealth is changing, all this stuff changes. So it's like a living document, basically, of things. And so not only is it free and you can get started today on this stuff, you should get started today before you even get a hold of MC, which you're probably psyched about doing, because I know I am psyched about doing that, right? So do those things, like put those things in place, make it part of your regular cadence to get together, make it part of your regular cadence to review these documents and amend them and improve them and expand them to suit your needs and your family's needs. I love that. I've been like taking so many notes this whole time. Like I love
Yeah,
that.
it's and to your point again, the
Yeah,
easy
go ahead.
part is the transfer of capital, and you can protect that through your legal framework. The hard part is the intangibles, and that's where you're going to have to spend time, energy, effort, and focus to really pass that on to your children, and so that they can pass it on to their children throughout the generations.
Yeah, and that's where we see a lot of these wealthy families where, there's the stats out there, right? Like within 3 generations the
Yep.
money's gone, right? And so the question is, well, how do you keep that money in the family and keep the family from squandering it, right? And these 5 steps of this sort of family office thing that's how you do it. Or at least give yourself a good shot of that happening, right? After
Yep.
you're gone, right? So who knows? But if you're teaching the family, these principles and getting together and reaffirming them, like this is how the Rothschilds and the Rockefellers and all of them, this is how they do it, right? They follow these steps. I love that. Okay. So much stuff here that we have covered today. I'm sure for a lot of people, this is all brand spanking new, and they have a lot more questions than we have time to get to in this podcast, or that I even know to answer for them, for their particular, or ask for them for their particular situations. So if somebody is kind of getting excited about this concept and is looking for ways to grow their wealth, maybe to build their laundromat portfolio or whatever their situation is, what's the best way for them to get more information, and what's the best way for them to get a hold of you?
Yourownbankingsystem.com. Yourownbankingsystem.com. There is a presentation which is 30 minutes. If you play it on double speed, it'll be under 15 minutes, where we put as much as we can into that presentation regarding infinite banking. All of the frequently asked questions we answer in there. We even give you some examples of what this actually looks like. And then there is a button right there where you can then request to set up a meeting with us, and we can do a strategy review and then explore options for you and your family. So that's at yourownbankingsystem.com. And then for folks that are interested, just learning more about cash flow efficiency, cash flow investing, I have the Cashflow Ninja podcast. That's just at cashflowninja.com. We've got over 1,000 episodes between all of our shows on there now. And I have covered everything, business, real estate, commodities, cryptocurrencies, paper assets. I mean, we've covered, we went pretty wide, Laundromats. We did. We had a great time having you on the show, and our audience loved it. So yeah, we've got all kinds of really, really cool episodes featuring like alternative assets, which a lot of people have not even thought about as possible investments or possible business opportunities.
Yeah, definitely go check out Cashflow Ninja podcast. It's on all the podcast players and cashflowninja.com and yourownbankingsystem.com. All these links will be in the show notes, or if you're on YouTube, they're down below in the description so you can get there. But highly recommend. Like I said, I started listening to your podcast like almost a decade ago, to be honest. Like it was 8 or 9, I don't know, 7, 8, 9 years ago, something like that, when I started listening, and so much good stuff over there. So make sure that gets into your podcast rotation as well. MC, this is, like I said, it's a little bit surreal and really awesome to have you on the show. And looking forward to doing more with you. Hopefully so many of you guys will have heard this and will get excited and check out yourownbankingsystem.com, and definitely check out cashflowninja.com. And MC, once again, appreciate you coming on and looking forward to talking again soon.
Awesome.
All right. Hope you loved that episode with MC. Such a great dude and so much good stuff going on in that episode. That's definitely one that I'm going to be listening back to multiple times just for reference, because there's just so much good information there. So hope you got a lot of good stuff out of that. But again, none of that means anything if you don't go out and take some action. So pick one thing and put into action this week. Don't wait. Don't delay. Don't postpone. Put into action this week. Be a doer this week. So pick something, put into action. And if you need, probably we all do actually need some accountability to get that action done, go post on the forums, laundromatresource.com/forums, what your one takeaway and action step is going to be this week. And let's keep each other accountable to actually taking that action. For me, I loved the talk on the family office there towards the end. And that is something that I've been actually thinking a lot about. And I love how he broke it down into those 5 steps. And it just made me think, going back to step 1, which actually requires no money. But, those legacy documents and formulating those, with the principles, the statement of purpose, and the legacy videos, which I thought was a great idea. Unfortunately for my family, maybe these videos are my legacy videos. And they got to just watch me talk about laundromats. I don't know. But those ideas were great. And it just made me think about more information I want to gather and how I want to tell the story of my family and how I want to shape our family's story going forward by shaping the story currently, present, and in the past too. And so that is something that I am actually very, very excited about, something that I'm like actively working on, especially since I had this conversation with MC. So a huge shout out again to MC for that and helping me shape my family legacy. So what's your one action step? Go out and take it this week. All right, guys. Thanks for checking out the Laundromat Resource podcast. We will see you. I don't know what's happening over there, but we'll see you next week in the next episode, which is another killer one. Actually, very, very excited about that one. All right. See you next week. Peace.